What is Murabaha's asset possession rule in Islamic banking? Imagine you're buying a car or a house through a special kind of sale that follows Islamic rules. How does that work? Well, in Islamic banking, there is a key rule called the asset possession rule in Murabaha. This rule makes sure that the bank actually owns the asset before selling it to you. It might sound simple, but it's very important for keeping everything fair and lawful. The bank has to buy the asset first, which means they take ownership of it. This ownership can be physical, meaning they have the item in their possession, or legal, meaning they hold the legal rights to it through proper documents. The main point is, the bank must own the asset before they sell it to you. This prevents them from selling something they don't own, which would go against Islamic law. Once the bank owns the asset, they sell it to you at a price that includes a profit margin. This price is clearly disclosed from the start. You agree to pay this amount over a period of time, making it a kind of installment sale. During this time, the bank assumes the risks that come with owning the asset. If the asset gets damaged or lost, the bank bears the loss, not you. This risk transfer is a key part of the process and shows that it is a genuine sale, not a loan with interest. The assets involved must be tangible, meaning you can see and touch them. They also need to be lawful under Islamic law, so no illegal or forbidden items are involved. The bank must be transparent about how much it paid for the asset and how much profit it is making. Sometimes, physical possession is hard to achieve, especially with digital or intangible assets. In such cases, legal ownership through proper documentation is accepted. Practically, this means the bank cannot sell an asset to you unless it has first bought and owned it. They document this ownership carefully to meet both Islamic and legal standards. This rule helps keep the transaction honest and fair. It also ensures the bank takes on the risks of ownership, which is part of the Islamic finance principles. In short, Murabaha's asset possession rule says the bank must own the asset, either physically or legally, before selling it to you. It must disclose the costs and profit clearly, and it must assume the risks during ownership. This process makes sure everything is transparent, fair, and compliant with Islamic rules.